Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
Emily, imagine, if you will, an airport runway with two 747s sitting out there parked, loaded to the gills with cannabis. Can you see that?
I can see that.
Now you add up the weight of the cannabis on the planes. And actually, I don't even know if you could fit this much cannabis into two 747s, but that is the equivalent of what Canadian growers have destroyed in 2021, a total of 425 million grams of cannabis last year. And so that's like the max carrying capacity for two 747s for them to even be able to take off. Or another way to imagine this is just two 747s empty, and that is roughly 425 million grams. That's a lot of weight.
I mean, I really can't even comprehend it. And I was so glad that you created this analogy for it, because I was really struggling when I read this headline this morning about how to wrap my arms around what that represents. Like, I was like picturing every unit. I mean, you and I are people who tour cannabis grows, and I've gotten used to during harvest season seeing massive gallons of garbage bags with just buds in them stacked, 30 feet high in a warehouse. And that to me is shocking. And I think this is nowhere near the amount of cannabis. I mean, I know it's nowhere near the amount of cannabis that has been destroyed in Canada. And it's staggering and kind of sad, frankly.
Yeah. It's so hard to wrap your head around, one, the weight, and just like what 425 million grams really means. When I was doing the math and kind of converting it into things like pounds, I had to double check my zeros a lot of times it seemed just overwhelming. Like, no way this could be 1 million pounds. No way this is 500 tons, but it certainly is. So not only the weight, right? And other things that I looked up, heavy things that you can imagine, a blue whale, that's another one. So more weight was destroyed than a blue whale. And those are big creatures and very heavy creatures. The weight alone. But what I don't have, and I don't know what it is like the volume, right? Like, what is the volume of it? If you could imagine 425 grams, I mean, we've all seen a gram of flour. Now imagine 425 million of them. That's a lot. That's a lot. And I don't know what that would fill. To my 747 analogy, I don't think you could pack it in. You'd really have to jam it in there somehow, but I don't know what it would take to fill how many rooms, how many stadiums probably you'd have to have, but it's a staggering number. This isn't new. I mean, this is in the article, MJ Biz reported on this, is where we're getting this. They talked about 2021 versus 2020. So this is for last full year, but they've done this before, and they had stats for other years as well. But the 2021 versus 2020, it's up 50%. So 425 million grams versus in 2020, it was about 280 million grams. So they were destroying plenty in 2020. And the 2020 was COVID, right? So COVID had this huge spike in purchase and consumption. A lot of people were buying. You see a lot of estimates, and just not even in this industry, but in other industries where people are kind of tempering growth, year-over-year growth expectations, saying, 2020 was an anomaly, and even, early 2021, because people were buying a lot, but they still destroyed a lot. It's crazy. It's crazy to think, how far off the mark they are here. And this is all the unpackaged cannabis, these numbers, but they also reported on packaged products that were destroyed, and it's a much smaller number, but it is still about 5% of all packaged products destroyed. That's like 1 out of 20. It's a big number when you think about that. And this article also talks about there's probably more than this.
Yeah, this is really interesting because it is a symptom of what happened early on in the Canadian market. So maybe folks weren't really around when the Canadian market developed. It opened in 2014, I believe, with their first medical licenses, and then expanded from there. And at that time, everything was done through IFRS accounting, and there are certain ways that you manage biological assets in IFRS accounting, which if you ever want a crash course in that, I would go find our episode with Matt Carnes. He talks about IFRS versus GAAP accounting. And then one of the metrics, because at that time, just going back in what is it, the Wayback Machine, to borrow from one of my favorite podcasts, Stuff You Should Know, is to think back to that time, we really didn't know what this market would look like. And, now we value these companies on EBITDA, revenue, sequential growth, all of these different metrics that we now have a bit of a grasp around. And we're also watching basket sizes. And we have so much more data, and thanks partly to Headset and largely to Headset. But before this, we kind of hypothesizing about what a market would look like. And the Canadian operators were really the ones who first received massive amounts of funding. They went public, and they were the ones to kind of put forth what projections might be about. Well, the number one metric back in the day was this thing called funded capacity, which meant that you had the capacity, frankly, that you'd funded. There's CapEx available to continue to cultivate cannabis. And I will share that this is one of the reasons that our team started rotating our investment capital into the US, into the MSOs, like back when GTI was like 30 people, was because we did some math in our office, which we always do, in which we were looking at the funded capacity of Canada. And we were like, okay, every man, woman, child, dog, and cat would have to smoke like at least an ounce of cannabis a day in order to power through this funded capacity. I'm of course exaggerating, but we knew it was kind of outpacing where the market was going. And further to that, which I think, Sai, you're going to address, was at the time it was just medical and then it became adult use, but the limitations on the product categories were still pretty strict. So, you can utilize cannabis in many different ways. I'm wondering if these were 747s filled with fire ass mids. That's probably what the case was. But, it's easier to push through a lot of cannabis if you're doing concentrates and getting into product form factors, et cetera, et cetera. So those are just some thoughts about how I think we got here.
Yeah, and in 2020, where you see that large bump versus 2019, that is to get into that way back machine. When the 2.0 products were first allowed in Canada, which are things like beverages and edibles and things that require extraction, and so it takes a lot of weight of flower or cannabis material to create. So I think that's certainly where you saw it. And I think it was a slow rollout when you look at sales in 2020 for these other formats. It was very, very slow, right? Just the introduction we've covered many times. I think these formats just take longer than just dried flower, getting them onto the shelves. You got to have the formulas, all the packaging, everything. It's a lot to do. And so I think it wasn't January 1st that the market was flooded with beverages. It wasn't until much later. And so maybe, by the time those things started actually picking up, maybe stuff was getting stale. They had to destroy it. Who knows? But that's certainly when, things really ramped up in Canada. But yeah, you're right about the funded capacity stuff. And I do want to touch on that too, because there are some parallels to, grows in the US, and just kind of thinking about, there is risk, right, of overproduction, what that means, especially when markets are not growing as fast as we'd like, the mature markets in particular. I want to talk a bit about like how much of this is in dollars. This isn't like apples to apples by any measure, but looking at like a retail price per gram of flour, and not all of this is flour, right? I'm sure it's just a lot of plant matter, but if it was flour, the average retail price per gram is $5.25. That'd be a $2 billion retail value, and then the wholesale value at retail, like what the retailers are paying for this product, would be about $1.5 billion. So that's a pretty significant amount. And again, it's not just flour, obviously. So you'd have to bring that down. But I mean, we're talking, in the billions, at least $1 billion worth of cannabis materials just grown and not sold. And in 2021, the numbers are even worse if you think about it, because the average price per gram was even higher, because the average price just keeps getting pushed down. And so price per gram in 2021 was as high as $6.74. Now that was in January of 21, and by December it was much lower, it was in the $5 range. But still, if you take that number, I mean, you're in the upper twos for the retail value of this, assuming it's flour. Again, it's not just flour, but it's a big number regardless, right? A lot of value getting destroyed. It's not only that, I mean, there's a quote in this article, a couple quotes talking about that a lot of larger producers have this cannabis in their inventories, even though they'll never sell it. It still looks good on your books to have assets, is what an individual is quoted as. A lot of producers aren't destroying products when it's ready to be destroyed, even though it's no longer marketable. So I think, these numbers are underreported. There's a lot of stuff that's just not there, but it looks good on the books. So they keep it on the books, so that the dollar of loss, of destruction that I'm kind of talking about is actually, I would say, much higher than we even think it is.
Yeah, I think it's just delaying the inevitable because you're going to have to destroy that out at some point and rip the Band-Aid off. And so you can even see it on the chart that you put here and also that's in the MJ Biz article, which I think we're just seeing how this has been pushed forward and forward and forward. So so it's accumulating and the whole thing is building up until they can really figure out how to distribute this through. I mean, one other thought that occurs to me just now is that a lot of the discussion around fundraising during those times, those kind of like peak moments when Constellation put money into Canopy Growth Corp, et cetera, a lot of these operators, when investors like I would get on the call with them and kind of call them to task about this funded capacity metric and also the ability for the market to absorb this amount of product, the discussion always went to, oh, well, Europe, we're going to export to Europe. And no, I mean, I just never thought that was really a viable. Right. And especially because if you were talking about that, I mean, we already know the logistics, for example, within the state of California of moving product up and down the state is not a perfect system. Moving product from North America to the Western Europe is also not easy. You have to understand logistics around something that, by the way, the UN when all of this was going on, the UN had not started to shift its perspective around cannabis. So it wasn't ever going to be that easy. So I do think this is a little bit of a catch up of that whole kind of talking point as well as a fundraising effort by these LPs.
Totally. And, I think there's supply and demand. I mean, we're in a world where there's, potential shortages in markets like New Jersey. Not that, international trade, like bring it all down from Canada, bring it to New Jersey. But, even just within the US, I mean, there's, I think, overcapacity in certain markets. And, some of that could alleviate some of those pressures, certainly, but we're a long, long way from that. And so, to bank on funded capacity and say, well, all the excess is going to go here, I mean, that's a big bet. And now we certainly know where that's all landed. And these numbers are from 21. I mean, that's not that long ago, right? So we're working on a lot more recent data and kind of the way the world is versus 2018 or even before when the LPs were medical only. So I think people can learn a lot here and use this information. Now, the Canada market is growing. Like I was pulling some numbers and it continues to grow. A lot of reason for that is, when you look at 2020 versus 2021, new products coming to market, areas like Ontario kind of getting out of the way of retail licensing. And, it was so limited in 2020. Now it's, basically unlimited and you're seeing a lot of challenges for the retailers, but I think it's just balancing out. But because of that access, more people are buying, yet they still, overproduced by, 26% in 2021. And, in some sense, it's like, okay, yeah, the market's growing. Let's continue to scale scale our grows and production. But, if they missed by 20% last time and then they upped their capacity, it just seems like a big miss. What could Canadians do better next year? I mean, just look at these metrics alone and say, okay, we probably should pare back by 20 to 25% of our estimates because that seems to be what's getting destroyed. And I'm sure it's not everybody is destroying that much, but just kind of on average, it seems like after so many years of these misses, and it ranges from 11% in 2018 to now 26%. So it's only getting worse. They're missing the mark more and more. Yet there's more data points that are showing, hey, don't produce so much. Even though the market's growing, I feel like they need to be pulling back.
Look, in business, there's hard decisions that need to get made. And sometimes you have built something out, you've got this fixed cost and you feel like you've got to keep using it, fully. But if you can't monetize it, if it just doesn't work to your point, from the data point, it's not worth it. And we do see this in states in the US, like for example, in Massachusetts, that's a state that's probably overbuilt in terms of the capacity to cultivate marijuana for the points of sale that the consumers can access it through that market. And especially because we know Connecticut is going to be coming online, Rhode Island's opening up. These different markets are coming. And so before, Massachusetts may have been a destination to go stock up. Now it will not be that way for that much longer. So I think you have to really just make very sharp decisions, really look at the wholesaling data, we have the ability to look into the future and look at the Western markets. You can look at Oregon. Washington's a little different, but you can look at Colorado, you can look at California. And so, I know some of the operators in New York and New Jersey have been talking about maybe they don't go gangbusters on their big grow. Maybe they go more kind of build it little section by section and try to meet the market as it grows. Now, as you point out, in the opening days of the market, it's a race to keep product on the shelves. But I think as a operator, you have to be very wise about your CapEx allocation and then making sure that you can cultivate above where the wholesaling prices will be, or otherwise you're just underwater. So I think that there's a lot of valuable information in this. And if I were a Canadian operator, I would just get extremely focused on the core product category. I would use my headset data and I would focus in on the core product categories that are really selling and that have really impressive margins. And I would try to back into that and really just support it with my vertical. That's how I would think about it. And it may result in shuttering some aspects or entire grows. I know, like for example, we know some of these LPs have divested of a lot of their massive agricultural centers because of this, like Tilray over the years, Aurora over the years. So I think it's just those tough business decisions to get yourself on the right footing, because there is a market there. To your point, it is a growing market. So why not just get it right, hit reset, do the hard work now, restructure and go.
Yeah, and they divested from those assets at a massive loss too, but they knew they had to do it. We haven't kind of discussed the biggest question, which is how are they destroying all of this?
I was curious. Yeah, I was picturing those 747s with big tailpipes of cannabis smoke coming out the back. But, one of the things I saw in Colombia, the country, not so long ago, this was in July, the police seized and burned 1.5 tons of cannabis outside of a town.
Well,
yeah.
We're talking about 500 tons. So, I mean, that's getting there, right? 1.5 for one town.
For one town. So the way they chose to destroy it was to, burn one down in the biggest of senses. So they lit this stuff on fire and literally just basically smoked up an entire village of people, because the prevailing winds in the region just completely enshrouded this little town. I mean, I laugh because this is kind of, you read about these things. It's amazing. But I think, they just really didn't play that one through. And the citizens of the town were like, oh my gosh, there's a fire. And then they realized that they were being enshrouded in cannabis smoke at the largest scale. So I think the police may have missed the mark on that one a little bit.
Well, there are worse ways to destroy it. So 500 tons, let's hope that's what the Canadians are doing. Although if they are, I don't think the wind blows south, but I'm here in Seattle. We're not too far. And I haven't seen anything quite yet, but one can hope.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.